What is up, everybody? Steve here. I hope you're doing well. Today we have a handful of things to talk about. For one thing, the CPI report came in not so good. We are up 0.1%, so the cost of living is only getting more and more expensive despite fuel prices going down. Now, I did a quick survey. By the way, thank you for everybody who has contributed to surveys over time. We had 847 votes on this survey in terms of housing costs. And then I'm going to talk about an article from the Florida Realtors in terms of housing values going down, but also stay tuned because I'm going to talk about what was going on in 2005 and 2006, and the numbers are pretty shocking. So let's jump in first to the survey that I put out. I asked, is your housing cost too high, way too high, just fine, or very low? We got, in terms of very low, 13% of you. So I believe that most of that 13% are probably financially free. They're probably free and clear on their where they live, on their primary residence. So congratulations to those people. We got another 23% that are just fine. So some people there might be free and clear on their home, but maybe don't have a whole lot of money coming in, and with the cost of everything just exploding from your food cost to gasoline and everything else, the cost of living is really high. 23% said just fine. And then we had 64% of people saying way too high. This is a problem. This is a problem in our economy. Our economy is not healthy despite what people think or say. And let's dive into housing prices. I said that we were probably going to see not just price reductions, but values of housing go down in the fall months. And we're here right now as of September 13th. So check out this article. According to a recent Black Knight report, house prices fell 0.77% between June and July, making the largest monthly decline since January 2011. And the first monthly drop of any size in 32 months. Now, 0.77% decline may not sound like a lot, but it is a big deal. And again, stay toward the end of this video because I'm going to talk about what happened in 05, 06. As mortgage rates continue to rise and weigh in on home values, some homeowners have lost wealth. Mortgage rates are now double what they were at the start of the year, and home sales have slowed. Right now, according to Mortgage News Daily, we're right around 6% based on their calculations. I think that's without any buy down of any points either. The president of Black Knight Data and Analytics says annual home price appreciation still came in at over 14%, but in a market characterized by as much volatility and rapid change as today's, such backward-looking metrics can be misleading as they can mask more current pressing realities. And I've been saying this on many other videos. It's important for us to really understand that real estate is all lagging data. So this is why, another reason why I want to take a look at what was going on in 05, 06. Roughly 85% of major markets have seen prices come off peak through July, with 1/3 coming down more than 1% and about 1 in 10 falling by 4% or more, according to the report. As a result, after gaining trillions of dollars in home equity collectively during the first 2 years of COVID-19 pandemic, some homeowners are now losing equity. And I think it's very important that people be very cautious at this period of time. I know that there's a lot of lenders reaching out to people via mail, phone calls, and everything else saying, you know, check out these HELOC loans where you can tap into your equity. Be very careful on doing that because as time progresses, you might be in an upside down position, underwater position, which is really bad if you have to sell your home. And if you have to sell your home and you tapped into that equity and you now have 2 liens against your property, you might be upside down and not be able to sell your property. And then it might lead you into a short sale position if you guys do have to sell your home. Declining home values in June and July brought the total amount of tappable equity down 5%, and Black Knight analysts expect the third quarter will show a larger decline. The report also indicated 275,000 borrowers would fall underwater if their homes were to lose 5% of their current value. But even with a universal 15% decline in prices, negative equity rates would still be nowhere near the levels seen during the financial crisis. Now let's talk about that. As quickly as appreciation went up, I foresee that we're going to see a lot more people go into negative equity situations than a lot of people anticipate or expect. And not so many months ago, people were literally on this channel in the comment section saying, we are not going to see prices fall. And obviously we're seeing prices fall. Now let's jump over to this from CNBC from years and years back. This is interesting. So from June to July in 2022, we saw that prices declined 0.77%. Now, if we jump over here, prices have already declined 1% from third to fourth quarters of 2005. So we basically had from June to July, a 60-day period of a decline of 0.7, just less than 1%. And then from this article, it states that from third to fourth quarters in 2005, we had 1% decline. So we're right up to this same numbers right before everything really hit the fan back in 2005. But let's jump over to this from Wikipedia. From the fourth quarter of 2005 to the first quarter of 2006, we went from third to fourth quarter in 2005, 1% decline. From fourth quarter to first quarter of 2006, median prices nationwide dropped off 3.3%. And if we scroll down, 2005 year end, there's less than 1% of households were in some stage of foreclosure during 2005. And then 2006, 1 in 92 of all households were in some stage of foreclosure during 2006. So why am I bringing this up? It's important that we look back in history and what was happening back then. And there was a lot of turmoil. There was a lot of things going on back in 2005 and 2006. And some people caught it. Some people understood what was going on in the housing market. But if we look, it started, I would say, pretty comparable. When we look at, and I know people are going to say, look, a decline in value, real estate value, 0.77% is nothing. I understand, but you got to start somewhere. And that somewhere in 2005 was a 1% decline for a full quarter, not necessarily from month to month. So I think it's important that we look back in history where we were at then and where we're at today and see some similarities. And I predict that we're going to see further decline in overall real estate valuations. I want to know what you guys think as well. And as always, all these articles will be listed in the description below for you guys to take a look. And let me know your thoughts, and I'll see you guys on the next video. See you.